Hello traders and welcome to another video review. Today is Thursday, August 13th, 2026. Let's take a look at the economic calendar for today. So what do we have here? Mostly data from the UK scheduled for release, and almost all of them were actually released already. GDP in various measurements generally beats the expectations, or it is in line with the expectations. A bunch of good data, high important data from the UK, but we are still waiting for the initial jobless claims scheduled for release at 2:30 together with the PPI index. So the situation here might be a little bit more welcoming for the US session traders. Initial jobless claims, PPI, scheduled for release at 2:30. So without any further ado, let's switch to the charts. We start with euro dollar to see what is going on after this data were published. So the euro dollar is still under the pressure. Very interesting situation has been developed on this market now. We have a rejection of the technical resistance at 1.1559, and we have a test of the upper channel line, descending channel line in let's say yellow color, and we have the test of the upper channel line of the ascending blue channel. So right now this area here, roughly around 1.1512, is a very important area for the bulls, because if they lose this area here, the next target might be 1.15. If the 1.15 is lost, then we are back inside of the yellow and blue channel, yet again targeting at least 1.1474, 1.1437. However, on the other hand, if there is any kind of a bounce from this area, it means that the breakout has been tested and the higher levels are expected, including the 1.1581 technical resistance and swing high from the August 7th. Let's take a look at cable after the data. As you can see, the data didn't help the cable traders to push the market higher. We have a bearish engulfing pattern after 1.3544 has been hit. The level 1.3544 is just 14 pips away from the swing high. Rejection, a little bit of the ahead of the data positioning, data release, and we're going lower. There is some sort of the local trend line that might be placed here at the bottom of this movement. So something like this might be seen here. So any breakout below the blue trend line opens the road towards 1.3433, 1.3416, and 1.3399. US dollar versus the Japanese yen, almost no volatility here after the test of the 158.61 has been successful. We have a nice rebound to the upside, and we are trading roughly around 159.50 with the momentum at the level of 58 points, which is quite good, strong momentum. So there is still a chance that after this pause of the sideways trading, the market might spark to the upside. As a spike, it might hit even 161 level, but this area is the very, very strong supply area that might result in a very way bigger activity than usual activity. For example, bearish and bullish activity, obviously, but definitely bears will be protecting, will be defending this area from the bulls. So any breakout is very bullish. Any reversal means that this was only a pullback, and then movement to the downside will be continued according to this situation here that we've seen before. Gold market keeps moving higher. Local high 4,450. Now we are testing technical support. Nevertheless, as you can see, we got this bearish divergence here between the prices making new highs and the momentum not making new highs. So right now we need to reserve this technical indication. We need to reserve the bearish divergence. As soon as we hit level of 50 on the 4-hour time frame chart RSI, the outlook might be way more bullish than it is right now, but for now we are testing the technical support at 4,365. S&P 500 doing nothing, most likely, just a little bit of the consolidation of the recent gains and a kind of a sideways trend these days with falling momentum almost to the level of 50. So the movement to the upside is way probable than the movement to the downside. It looks like despite the fact that the momentum is falling, the price doesn't actually fall at all whatsoever. The market is trading at 7,758 points, so the bulls are still strong. Bulls are still right now the dominant side of the market. They control the price, and breakout to the upside is expected. Crude oil, after filling the gap here, is right now again moving lower. Right now RSI sits at the level of 50, so we should see some sort of maybe some kind of a bounce to the upside, and then downside should be continued towards 78.45, and the momentum should fall into the negative zone yet. Again, please notice that there is still this blue area waiting to be filled. This is the gap, retail gap, waiting to be filled, but no one said it will be filled quite soon. For now, 84.60 is the swing high. As long as we trade below this level, the outlook in short term remains bearish. Last but not least, the Bitcoin. The Bitcoin keeps sitting on this channel. Sorry, inside of above the trend line. But it looks like the market is under the bearish control. The bears are trying to push the prices lower, and it looks like they are going to find a way to push the prices towards the level of 62,500, where the technical support is, and where the previous area of interest, which is very interesting, free candlestick pattern area has happened, right? So we got this buying activity from the market participants. Nevertheless, it wasn't good enough, it wasn't strong enough. This buying activity wasn't strong enough to push the prices above the swing high at 6,961. So for now we're just sitting on this trend line, but any breakout lower is bearish, targeting this the technical support at 62,516 or even lower. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.